Hi guys, and welcome to the weekly forecast video. And today I'm not gonna take much of your time because the video from last week is basically gonna carry on the forecast that we did last week. Is going to carry on into this present week. So first things first, let's look at the calendar and get to see what's ahead in the week from the fundamental side. And already Monday is done, so we look to Tuesday. For those that trade the New Zealand dollar, take note, you've got the RBNZ governor speaking. That is as we head into London Open. And then tomorrow also at 4 p.m. we've got the CB consumer confidence from the United States. That is basically, that will rattle the dollar a bit, but I don't think it's gonna be that much, right? So I'm just gonna be looking at those high impact fundamentals that you need to take note of when you are trading or when you have positions open, especially on the majors. Then Wednesday we have the GDP for Great Britain, and then we've got the CPI news for the euro, and then we have the ADP non-farm employment change. This would also give us a directional bias in terms of what to expect on Friday. Remember, this is NFP week, so it's the week where the monthly candle is closing. Then as soon as that happens, we're gonna have NFP on Friday the 2nd. So on Wednesday also we have the GDP for the Canadian economy, then pending home sales and crude oil inventory from the United States. So these fundamentals, guys, take note. You see, this is something that you need to do at least once a week. Get to know the fundamentals that are coming, that are going to move the market. Then on Thursday we've got the German manufacturing PMIs that will definitely move the euro. Then we also have the manufacturing PMI from Great Britain and the initial job loss claims from the United States. Then ISM manufacturing PMIs from the United States. These ones, they're also going to move the dollar. Then Friday the 2nd we have non-farm payrolls. That's the most important fundamental to expect on Friday. And the moment we are getting the non-farm payrolls for June, right, we also have ECB president speaking, right, at 2:30. So expect huge volatility coming into the market at this time. And take note now, it's on Friday, so you just need to be a bit careful with your positions on Friday. So those are the fundamentals that I can pick from a glance that I expect to have an effect on the market. Now, coming back to our portfolio, dollar index, euro, pound USD, gold, yen, and so on, right? Now, looking at the dollar index, the pullback from last week didn't have much effect in terms of retracement to the downside, but last week I mentioned 91.64. That was the ideal entry for long positions, and I haven't changed that notion yet. So 91.64, this area here is going to provide support this area is going to provide support to price, and then we are likely to see another rally to the upside. Now, this all depends with the fundamentals that we're gonna get, and how they're gonna come out, whether negative or positive. Now, 9164, why is it so crucial, right? Because that's the main threshold of this old bearish order block, which price broke to the upside. You can see we've got a bullish breaker here, and the price is finding support right at the 50% mean threshold of this bullish breaker. You see, now these rallies from 9164, right, they're going to provide good opportunities for you to short assets like EURUSD, GBPUSD, AUDNZD, NZUSD, and the like. And then they're going to offer you long opportunities on USD CAD, USDJPY, and USD CHF. You see, so take note, 9164 already we've got dollar in a very huge consolidation since what is this day here, the 23rd of June. You can clearly see we've got a consolidation going on there. So what is it that you need to see in terms of price action? You need to see an impulsive move from the equilibrium point of this consolidation. Whether it's to the upside or downside, I do not know that, but we will see that when price forms the pattern. So once you see an impulsive move from the equilibrium point of this consolidation, that is your trigger to trade in the direction of the impulsive move. So the impulsive move can happen going to the downside. So you wait for a pullback to this range for you to trade dollar to the upside. But since we are bullish on dollar, I'll be expecting this impulsive move to happen going to the upside, such that when we pull back to the equilibrium point, we expecting long positions. Now, before we go any further, right, I just need to look at the COT number for dollar index, right? Now, from last week, the non-commercials, they've taken profits on both sides of the market, long and short positions. But if you look at the exposure that they are holding, they've actually added more longs, and they've taken almost 2% of their shorts, right? Now, the interesting number that we got right now on dollar is coming in from the commercials. They've taken almost close to 2,000 positions off on their long exposure on dollar index. That is crucial. We need to understand what this means. If they're taking profits on their long exposure and they've added just a small bit, roughly about 300 positions on the short side, right? Now, these guys are clearly not yet decided what they want to do. Yes, they might have taken off a huge chunk on their long exposure, but when you come to the chart and you look where dollar has traded away from, we had a huge expansion due to FOMC, right? Now, of course, this pullback here is the one where we are seeing the long positions being trimmed and a few short positions being added. These guys are not yet confident that dollar is going to drop to the downside, right? And open interest on dollar jumped from 37 to 34,000, and that's just a difference of about 2,800 from last week. So I'm expecting dollar to continue with this range, right? I'm expecting dollar to continue inside the range that we are seeing here as we head into NFP. So it's of great importance that you take note of the weekly open on dollar index. The weekly open is coming in right here, 91,770. Right, let me just make this a different shade, because this is gonna have an influence on how we approach the week. So as long as price is trading above the weekly open on dollar index, look for price to trade into discount for you to be a long trader. The moment you see price trading up below the weekly open on dollar index, you need to wait for those long entries, because I'm expecting the current weekly candle on dollar, this candle here, I'm expecting it to close bullish, right? Probably taking out the buy stops above these relatively equal highs. So I'm expecting dollar to be bullish this week. So 91.64, that's your ideal entry to the upside on dollar index. Now coming to EURUSD, right? Just a recap from last week. Yes, I was anticipating shorts from 19,700. If you didn't watch last week's video, guys, you might need to go back, because that's where I explained that 1.19700 is your ideal entry for short trades, right? And if we come to the hourly chart, you can see how it offered great shorting opportunities, more than 100 pips in total, just from one pair. You see, just from one pair. So the same applies this week. That price point, 1.19700, right? 1.19700 is your ideal entry for short trades on Euro USD. Target hasn't changed. We are still looking for price to trade to clear the sell stops below 1.18460. right? Now we've got a bearish order block on H4. We've got this bearish order block. Now we are in a weekly bearish order flow on Euro USD. That means we'll be hunting for short trades. This area here, if we break above 1.19700, expect this level to provide resistance. That means 1.19850 will be the ideal zone for your short trades. Now let's look at the COT number quickly for the euro. Now the euro, the non-commercials, they've taken profit on their long exposure, and then they've added a huge chunk of short positions. This is crucial, this is critical. Then when we come to the commercials, they've added just about 2,000 long positions, and they've taken huge profit on their shorts. Now open interest is sitting right around 694,804. It didn't change much, just 82 points, right? So expect euro to continue trading to the downside by the mere looking of these numbers here. The non-commercials, they might keep pushing price to the downside on Euro USD. So expect weakness to continue in fiber, and from which level? Any price point in this range here. See this range that I've marked? That is our premium range, and you can see how that range offered great opportunities from last week. So same applies this week. We're expecting this range to provide resistance, and price should trade into premium and we should be shorting the market from there. You can see on H1 here we've got this nice bearish order block. Expect price to find resistance any price point above 1.19449, this range here, ideal shorting area. Now coming to pound USD, the same applies. We still have this range here. Right, we still have this range here. This is the range where I'm expecting pound to find resistance, and already that has happened today. You can see this previous H4 candle, it has dropped 41 pips. So understand this, guys, it's not gonna get any more precise than what I'm explaining to you. If you get a setup that is going to offer you 40 pips on a Monday, are you gonna take that position? Of course you take the position, because 40 pips is a lot. And when you look at your weekly target, of which I advise most of you guys, try to have at least a target of 60 to 70 pips per week. That can have a huge impact on your equity. Now remember, obviously you have to factor in your risk management. Don't just trade without a risk management, opening positions with different lot sizes. That is not going to help you in the future. So looking at pound USD, the price around 1.39424 and 1.39613 that is going to be our ideal shorting range, because we are going to be looking for short positions on pound USD. So from where price is, if we do get a pullback to 1.39424 or 1.39613, expect market to trade lower with your first target around 1.37865. So this is the same setup, the same forecast as of last week, and you can see last week we had nice entries here for shorting opportunities. Right, let's see what the number looked like on pound. So the other reason why I'm not factoring in much of the COT number in the past week and this current week is because of that expansion that we had from FOMC. There was a bit of discrepancies in the numbers, huge changes, you see. So you need to get those numbers stabilized over a period of say 3 weeks for you to be so sure in using the bias from the COT number. So the non-commercials on pound USD, they are holding roughly about 51,400 long positions. They've taken profit as of last week. And then the short positions, this is now interesting. Remember on euro they added a big chunk, that is 118.92. so 8, we're looking about 26,000 positions that were added to the downside on euro. That is crucial. Then on pound here we've got about 10,000 positions added to the downside. So by mere looking at that number, yes, it's the non-commercials. We work with what the commercials are doing, but you cannot ignore such a huge injection of positions in the market. You see, as a retail trader, it's going to offer you opportunities to trade short. Now when you look at the commercials, you can see how they've injected more longs. From 6 to 1, they've got 85,000 positions, right? That's about 14,000 positions added to the upside, which can easily be diluted by the 26,000 shorts on the non-commercials. Remember, these two guys, they hedge against one another. So looking at open interest, we've had a big jump in open interest. It increased massively to 171. That's an increase of about 15,000. So when we look at pound USD, definitely it's going to be under immense pressure. So selling opportunities are ideal on pound USD. Look for price to trade back into premium, this pink shaded area. There is a premium array there in the form of this fair value gap H4. Expect price to find resistance and trade to the downside. You can see already today we came right to the fair value gaps opening, and then price dropped about 60 pips over on pound USD. So yeah, that's the forecast on pound USD. Expect price to find resistance in this range here, which it has done since last week's price action. Since last week's price action, this level is going to provide resistance with your target set at 1.37860. Then finally, let's look at gold. Right, the thing with the precious metals, for now, I'm not gonna have any analysis for you on the precious metal, other than saying, since we are bullish on dollar index, expect the precious metal to be under pressure to trade lower. We still have these guys here still active in the market. They haven't been taken out, this sell stop. So expect gold to trade lower than, let me just put a price point there. Expect gold to trade lower than 1758 during the course of the week. So ideally you need to be hunting for short trades. From current price so far, gold to reach out for 1758, you're looking at about 200 or so pips. Then we also have Aussie dollar and New Zealand dollar, right? We're going to be shorting these pairs, especially New Zealand dollar and Aussie dollar. New Zealand USD is going to provide ideal shorting opportunities. You can clearly see what price action did already today. There were quite a few opportunities in the market today. Price traded inside fair value gap and failed to create a new high, right? This is on a daily time frame. Now let's look at dollar daily. Now when we look at dollar daily, we also did not create a low, right? Aussie dollar, when we come to the daily chart, we didn't create a high, you see. So price action is in tandem right now. There's no divergence at all. But for some reasons, if we do get any divergence, you know what to do. The lesson that was uploaded in week 4 of the mentorship yesterday has got all the answers to that. But see, we've got a vacuum there. So ideally you need to be hunting for short trades on this pair, from which price point we've got an H4 bearish order block here, which is going to provide resistance when price comes back. This area is going to provide resistance. That's around 0.7800. So expect price to find resistance inside that range, or from current price it's just gonna continue going to the downside. So I'm expecting NZD USD to close strong bearish at the end of the week. So yeah, I think that's pretty much about it. And for USDJPY, we're going to be hunting for long positions, from which area inside this fair value gap here. Expect AUDNZD to find support right around 1110.41. that level is going to provide support for USDJPY to push to the upside. So yeah, this is what I wanted to share with you guys. And there's also institutional pairing in dollar strength, of which right now dollar is quite strong. So you can also use institutional dollar pairing by looking at the central bank interest rates, right? When you look at the central bank interest rates, you need to apply the criteria that we use when dollar is bullish, right? So if dollar is bullish, you need to look to be a short seller. You need to sell the country that has got the weakest interest rates against the country that has got the strongest interest rates. So you're looking at pairs like Euro AUD. You see, Euro AUD shorting opportunities will be ideal there. Then you've got Pound New Zealand dollar. Already for the past month, there's a top-down analysis on this pair. Already for the past month, shorting opportunities were ideal, and they're still ideal on Pound NZD. Then you're looking at also currency pair like Euro NZD. Those pairs, ideally, you need to be hunting for short trades. So I leave that to you guys as your homework. You can see already I've been discussing this pair with one of the students. The student private messaged me to say, Pound USD NZD, what is the ideal scenario that we can look out for? And you can see this zone here is ideal for shorting opportunities. I highlighted that blue shaded 1.97638 is an ideal shorting area, and you can see the current daily candle is finding support there. Why? Because of this fair value gap here. We've got a fair value gap on daily, and price is finding resistance right just above the equilibrium point of that fair value gap. And when you go to H4, I mentioned to the student that there's a fair value gap on H4. Price will look to close that, and then it will drop, and exactly that is what happened, for a total of almost 73 pips on a Monday, folks. So yeah, I leave that to you guys as your homework. Euro NZD, Pound NZD, Euro AUD, GBPUSD, those pairs, they're going to offer great shorting opportunities. So yeah, that's pretty much about it for this week. The bias hasn't changed on dollar. I'm still bullish on dollar, though this week might be a bit tricky when it comes to the bulls in dollar. Might be a bit tricky. You can see already we've got a formation of a bullish channel here. We'll see how that goes. We don't want to see price break to the downside. If that happens, then this bullish order block here around 9137 will provide support for price to push to the upside. So yeah, that's pretty much about it for this week, folks. And if you haven't subscribed to the channel, just make sure you click the subscribe button there, and make sure you've got the notification icon selected so that you don't miss any of the uploads that I put on the channel. And also, if you are not yet a member of the mentorship group, unfortunately you're only going to get to see this video probably Thursday London Open or New York Open, but the mentorship group, the video will be available to you guys Monday just before New York close. So yeah, that's pretty much about it for today, guys. I wish you guys good luck and happy trading. Thank you.